What would happen if the Strait of Hormuz suddenly closed? Imagine this. A vital waterway responsible for 20% of the world's oil is suddenly blocked. No oil tankers, no global trade, and no easy solution. The ripple effect would be felt across the globe, and the global economy would come to a screeching halt. But could this actually happen? And if it did, how would it change the world? The Strait of Hormuz is a narrow passage between the Persian Gulf and the Gulf of Oman, connecting major oil-producing countries like Saudi Arabia, Iran, and the UAE to the global market. Every single day, over 17 million barrels of oil pass through it, amounting to about 20% of the world's total oil supply. It's a key lifeline for global energy. So, if this passage were closed, the effects would be immediate and disastrous. If the Strait of Hormuz were to suddenly close, whether due to political conflict, military action, or an act of terrorism, the world would feel the impact almost immediately. The first and most obvious result would be a massive spike in oil prices. In fact, analysts predict that oil prices could jump by as much as 50% within the first 24 hours. But this isn't just about paying more at the gas station. The global oil supply chain would grind to a halt, causing panic across industries. Airlines, shipping companies, manufacturers, all reliant on oil, would be hit hard. But that's only the beginning. With oil prices rising, inflation would quickly follow. The cost of goods, from food to electronics, would increase sharply, affecting businesses and consumers alike. And as supply chains are disrupted, the global flow of goods would be severely hindered, especially in the Middle East and Asia. Ports would become overwhelmed as countries scramble to find alternative shipping routes, and logistics companies would be unable to keep up. This disruption would be felt across almost every industry, as nearly all sectors depend on oil in some capacity. As the price of oil skyrockets, the global economy would be sent into a tailspin. Stock markets would react violently, with massive sell-offs as investors panic. Energy stocks might surge, but every other sector, technology, retail, manufacturing, would plummet as higher operating costs and a slowdown in demand take their toll. Economies like the US, China, and India, all heavily dependent on oil, would be scrambling to find new sources. But these countries wouldn't find any easy solutions. The sudden shock would send the global economy into a deep recession, possibly even a depression. But the economic fallout wouldn't stop there. With trade grinding to a halt, the banking system would also come under immense pressure. Banks around the world are deeply interconnected with global trade. If trade were to freeze, so would credit markets. This could lead to a severe liquidity shortage, where banks wouldn't have enough money to lend to businesses, causing credit to dry up. Companies would find it difficult to access the capital needed to pay suppliers or maintain operations. Small businesses would be hit hardest, and governments would be forced to intervene with massive bailouts. But with interest rates already at historic lows in many parts of the world, would they have the tools to stabilize the financial system? Likely, they wouldn't. Meanwhile, the geopolitical situation would quickly spiral out of control. The Strait of Hormuz is not just a vital oil route. It's a highly sensitive geopolitical hotspot. Iran, for example, has long threatened to block the strait in retaliation for economic sanctions. And if that were to happen, we could see a military conflict erupt. Countries that depend on oil from the region, particularly China and India, would be under enormous pressure. The United States might intervene to protect its allies and ensure the flow of oil, leading to a dangerous escalation. This could quickly turn into a broader regional conflict, with military tensions rising and the possibility of a full-scale war becoming real. The global security situation would be unstable, and the cost of protecting oil shipments would soar, further driving up prices. As the geopolitical and economic crises unfold, investors would rush to safe haven assets. Gold and silver, traditionally seen as stable investments during times of crisis, would experience massive price increases. Investors would flee to precious metals, pushing their prices to new heights. Similarly, treasury bonds, Swiss francs, and other traditionally safe assets would see surges in demand as investors seek stability. In the midst of chaos, those holding these safe haven assets would watch their wealth grow, while others scramble to protect their financial futures. So, what would happen if the Strait of Hormuz suddenly closed? The consequences would be catastrophic. Oil prices would spike, inflation would soar, and stock markets would crash. Global trade would grind to a halt, and the global banking system would face severe liquidity crises. The geopolitical tensions would rise, leading to the possibility of military conflict. And throughout all of this, investors would rush to safe haven assets, driving up their prices even further. But here's the real question. How prepared are we for a crisis like this? The global economy is incredibly fragile, and a single point of failure like the Strait of Hormuz could bring everything to a standstill. If something like this happens, would we be able to recover? Or would we watch as the entire system collapses under the weight of its own vulnerabilities? If you want to stay ahead of global shocks like this and understand the true risks facing our world, make sure to subscribe to Bullion Edge. We break down complex geopolitical and financial issues so you can stay informed and prepared for what's next. Stay tuned for more in-depth analysis, and remember, the next big crisis could be just around the corner.